Welcome back, friends. This is Rohit Devangan. Today I'm presenting you gap up and gap down. Uh, in this session, we'll give you brief concepts about what gap up, gap down, what the typical strategies are, and as usual, we will take you through the custom screener or our strategy builder, wherein will help you to screen the gap up and gap down and related strategies. Okay, so jumping on to what gap up is. What is gap up? If there is a sudden change in the price, that means the previous candle, when there are two consecutive candles and you can see a distinct difference between the two candles in terms of gap, or there's no overlap, then it is called gap, right? The gap can be up or down. So let's see an example of what gap up is, so that it becomes lot more easier to understand what it is. So gap up, you see two consecutive candle. There's a clear gap between the two candles. So this is previous candle, this is latest candle, and you see there's no overlap between the two candles. This is called gap up. Similarly, just opposite of that is gap down. When the subsequent candle is not overlapping and with the previous candle, and it is below the previous candle, then it is called gap down. There are two kind of gap up. One is which is called full gap up, where there's neither body nor wick is overlapping with each other with the previous one, and the second one is the body is not overlapping, but the wicks may overlap between each other. So both these are very good, very important. Depending on how do you feel comfortable, you can use one of the two strategies. Okay, this is one of the simplest pattern, because it's very easy to spot, because the gap is very easily visible out here, right? Compared to a lot of other patterns, this pattern is easy to comprehend, number one, and at the same time it's extremely powerful. So there's a significant reason, or there's a very important reason why gaps happen, right, which we'll understand in a short while. When does gap happen? Gaps can happen at any point, any time, but generally they happen when there's a gap or when there's a pause between two trading period. For example, around 3:30 the market closes. Next day the market opens at 9:15. So there's a gap between, or there's a lag between the trading cycle or trading time. So anything which is cooking up overnight can lead to a sudden enthusiasm in the stocks, can take the stocks up, or can take the stocks down. So that generally happens after trading period. Okay, so why does gap happen? There can be any fundamental factors like quarterly results, annual results, AGM, corporate actions, or certain news in the market, launch of new product. There can be merger acquisition news which comes overnight. There can be economic policy change, interest rate change, inflation rate results, or sudden anti-dumping duties, or any of those macroeconomic or the international market sentiments. These days we do hear something about war and other things, right? The world is no longer very peaceful as it used to be few years back, but those things do happen and they affect the market. And what we really want to bring you back is in terms of the impact it can have in the market. Management change, suddenly CEO, CTO moves out of the company, then, or there's certain rumors about the company. There can be a failed trial or any of these things, news based. All these can have impact in the next day price, either upward or downward. Gap categories, they can be simple common gaps. What are common gaps? You see that there are gaps between two things. Like in this particular example of Bank Nifty, you see the gap is very often primarily it is a cumulative impact of the other markets, which is trading either in a positive or a negative direction. Can be a Dow Jones, can be Nikkei, can be FTSE, or any news, global macroeconomic, that can lead to certain gaps in the market, right? So index are likely to have more gaps because especially when there's an impact in the other markets, global markets, right? So this is a very common gap. Now, as we always do, we give you an example, we give you a concept, we tell you how it is, and then we straight away take you to the screener where you can use. So gaps has always been part of it, almost from 10 years. If you want to just go for a simple gap up or down, bullish gap up, gap down, you go here. Britannia is one of the example where you see gap up, gap down. So this is where the gap up, gap down is. You can easily get those things out here. Okay, one moment, let back here. So you can see the gaps, they are pre-created screeners which you can directly use. To start with, it's a great place. But as in when you start getting better, you would want to see and customize it. So for that purpose, we have custom screener. In custom screener, you just go there. In the price action part, you'll see gap strategies, where you can click on the gap and you say that what kind of gap. So I want gap which is at least 1% gap up, right? So when you click on this, you'll find all the stocks where the gap up is there for at least 1%. So you see one stock which is coming out here. If so, maybe the condition is little more strict and the market was down today. So let's try to see if there's any gap down with 1%. So you see quite a few stocks. So gaps generally, if the market, you'll see more gaps in the direction of the market. Today market was not so good. So you'll see more of the downward gap. So you'll see that there's one gap here. The second gap is here. So as I said, there are two kind of gaps. One is full gap and second is partial. So if you see that the wicks are overlapping, so these are partial gap, right? Again, this is a partial gap, right? Now, the kind of customization you can do here, number one is you can put the percentage, and second is you have the ability to go to partial gap also. So you go in advance and you say that you want gap on high-low range or you want gap on body. So when you go to body is little less. So currently what we were looking at is the default is body. When you go to OHLC, there were about 7 stocks. When you try to find the same thing with the full gap, you'll see that there's only one stock, which is Route Mobile. So you see that there's a proper gap or a full gap in Route Mobile. So the thing is, number one is simple gap. So to start with, for simplicity, if you just want a gap of a certain percentage, 1.5, 2%, whatever that percentage is, you can just use up and down here. If you want more customization, you have the second thing which we have seen is high-low range and body range. This screener is something, if you have been in the custom screener world, custom screener videos, or you're used to it, you can customize it. You can have a gap on a different period. So the screener which we are running is EOD, but you can, if you want a gap on, let's say, weekly, you can override that as well, right? So there's no gap on weekly. So let's keep it simple. The idea of concept here is, first is you can have set a percentage. Second is you can have on a high or low range. Okay, so that level of flexibility we provide. Then what do we see next? Next is gap up runaway. What that gap up is, if there's a gap up and the stock is moving in the direction of gap, that means it's not breaching it again ever. That means it's a gap up runaway. These are good strategies, especially when you see that there's a momentum out there and it's moving in the direction of gap. That's where you can take a long position or make an entry in the stock, right? So the example here is we go to gap up runaway, we run. Okay, so you see there are 2 stocks which are coming with 1% gap, and the gap happened on 29th, right? And we have kept a condition of 2 to 5. I'll explain what 2 to 5 is. When you click here, you see there was a gap and it's moving in that direction, right? The second stock we see is there was a gap and the gap is not yet filled. It's in that direction. Okay, because market was not so good, maybe in gap down you'll see better things, right? Now what 2 and 5 is, the runaway should be at least for 2 to 5 days. If we increase it to 10, maybe we'll see better quality of gap. So when you see here Axis Bank, the gap was there and it's running away, right? So you see better quality. Gap is there and it's in that direction, right? It's not, there's no sign of it filling it back. Gap is there and then it's up there, right? So you can set gap is there and then it's going up there. So first customization, minimum gap, on which range do you want to have. If you go to candle body, you'll see a lot more results here, right? And minimum for, let's say, 5 to 10. Let's see if there's any results coming in. So the gap happened on 22nd of April. 22nd of April, the gap happened and it's moving in that direction. You'll see quite a lot of interesting things which are coming here. When was the gap? Gap was on 22nd April. 22nd April, the gap was here and it's moving in that direction, right? Similarly, you can have a lot of customization. So number one, what you can do is you can set the time, body range or not, runaway, and then you want to say that runaway is for minimum how many ticks. The more number of ticks, the advantage is better confidence. The disadvantage is you may lose the bus, right? So the entire movement may be over, and it's now not moving in the direction of the gap as aggressively as it had moved in the earlier tick. Depending on your profile, you can use it, right? What you can also do is, if there's a gap and then you want to see that it's moving in the direction of gap, you can override. So over here the gap is on the screener is daily. You can override it on 5 minutes or 10 minutes tick as well, right? You can also set subsequent gap on subsequent runaway or fill or whatever on the default is closed. You can do or open or high or low or other combinations, which you are already, I'm sure you have already seen in the previous videos, right? So these are other level of customization you can do. The next thing what we want to show here is gap fill, right? No, breakaway gap. So breakaway gap is, so certain times what we have seen is no, so I think we have missed the fill, have we? Okay, we'll go to fill later then. Breakaway gap, right? So sometimes what happens is there's a sudden change in the such a huge gap that after the gap the previous trend is completely ignored and a new trend is started. Like in this example, Ultratech Cement, if you see, there was it was moving in a very different direction. It was an ascending triangle. This thing is broken, the support level is broken, and by a huge margin, generally not seen too often, and then is a completely different direction. A lot of times after such a huge gap, what happens is the market moves in the direction of the gap, right? Generally it's a runaway, but in this example there's a consolidation which is going on in that direction, right? So it's not runaway, it's neither filling nor runaway, it's a completely new trend which has started out here. It's pretty interesting. Another example which I'll show you for Paytm. Paytm, there was a gap, there was certain news which was not so favorable for the organization. So there was a gap. So you see the market was pretty much in a direction, it was trending up. Maybe it was decently trending up. Certain things happened, then market dropped. Perhaps this is because this is a very this thing, no movement, this thing. So the impact was so huge that there was a lower circuit, and again on a subsequent day there was a lower circuit, and then it's moving down. So this is typically an example of gap up, gap down, and runaway. It's moving in the direction of the gap, right? Consistently moving in the direction of the gap and still making lower. Today also it's not looking too good, right? So pretty rare of breaching at this level, and unless there's some big news, very positive news coming in. So another good example of a gap down and breakaway, right? So there's a break in the trend and it's moving in completely different direction. A lot of times the gaps do get filled. So when you see out in the example, in this particular example, there was a gap, and after a certain time the gap got exhausted. Whatever the news, either the news was not so solid, people were a lot more enthusiastic that the news would take the stock away. The news didn't turn out to be as attractive as it would on the day of the gap, on the moment, and it's coming back to the same level. Again, we have a filter for that. A lot of times gaps get filled, right? So we have a screener for that, gap fill. Let's run if we see any stock which is coming. So there was a gap which was on candle body range, and the gap got filled. So gap was created by Adani Greens on 22nd of April. So this was 22nd of April. It went up and then it got filled back here, right? Another example, not too great an example. So maybe what we have done is filling after 5 to 10 ticks. Let's reduce the period and see if there are more results or better results. So Swan Energy is coming in, again not a good example, it's the same thing. What we see is there was a gap and then that got filled, right? So again it's a very weird structure, but a lot of times these are very important things to look for, and lot of analysts, professional analysts also look for gap filling. So that's where the strategy is. Maybe there are more things on gap down, so let's try to see if there's anything gap fill, gap down and then filling. So there was a gap down on Amber Enterprise on 15th of this thing. Where's 15th gap, and then it got filled, right? So again you'll see there was a gap down, which when was that? Not, yeah, this was a gap down and it eventually got filled, right? So those kind of examples, you can see that. And then another very powerful thing, when there's a gap, then that gap period can act as very good as a demand or supply zone. So we have a screener where at the gap, there's, let's see, gap up. Yeah, the gap up is more natural to understand. So there's a screener which is gap up and bouncing from gap high level, right, wherever the gap has happened. So there are few stocks. 21st of March, Bank of Baroda, there was a gap up. So 21st of there was a gap up over here. Again, this example is not a great example, but there was a gap up and again it's taking support from that level, right? So this acts as a very nice demand and supply zone. This level can act as a very good demand and supply zone. Maybe some other example. This one, there was a gap. After some consolidation, there was a gap up. It moved up. Again, that level is acting as a support. So you may use this also as a good strategy. In this example, what we had was gap up bouncing from high. Similarly, we have a screener where gap up and bouncing from the low levels, right? Again, as I said, there's a demand and supply. So Ether had a gap at on 4th of 4th, 4th of this thing. Again, it is trying to come down to same level, right? So it is taking support. It's near that support level of the gap over here, right? The second example we have is this one. There was a gap. The gap level is breached and it's near that support level, right? Near the low level. So you can utilize, if you want to use just plain gap, great. Don't go to advanced option. Just go to simple minimum gap percentage. What gap percentage do you want to have? If you want to go a little more complex, then what you can do is again keep it simple and you can utilize with the candle body range. Then the other example of gap up, runaway, gap fill, potential, bouncing from gap high and low, you can always use, and that will come with a little more practice. If you are already an expert, go ahead, start using it and give us feedback that how it is. So exhaustion gap, gap fill, we have covered this, right? So strategy, simple gap strategy. What does gap tells is that after whatever happened overnight or within that 2 trading candle period, some news has come in, there's a momentum, so you can just get into that and reap benefit. If you are a scalper or a swing trader, great, caps are very good ways of doing it. You can do it on a body range or HL range, as we have seen. Gap up, runaway, we have seen bouncing from gap levels, whether it is high or low. Gap fills, gap fill potential, likely to fill. Did we cover that? Maybe I'll just cover it again. So this is gap fill potential. So as we have seen in the examples, no results. Okay, let's go to body range. Maybe there are some results. Over here on 4th, we have Ether. The gap is not yet filled, but it's likely to fill, right? So some of the analysts or traders believe that gaps do get filled. So this will give you a heads up that gap is likely to get filled, right? It's in that direction. Now, what better than if you want to see that gap is likely to get filled, right? So what you can do is you can add some more combination along with this. Like this is a gap. So what you can do is you can add to get a heads up. You can go to OHLC trending, and you can see that there's a falling candle for minimum 3, any kind of candle. So what you can do is gap is getting filled and there are 3 falling candles. So in this example, computer age management, 22nd, the gap is there and there are 3 red candles. So this gap is likely to get filled in lot higher probability compared to other ones. Over here, there was a gap here and there are 3 consecutive red candles, right? Downward candles. So so just along with the gap, you can use other combinations to take it to the best possible advantage. So we were gap fill potential, right? Now coming up with certain combination with the gaps. The first one, which is gap with TSR strength index. So as I said, gap is very powerful strategy. I'll just reset it and go with the go from scratch. 1% gap is too large. Let's keep it 0.5 because the market is not too good for last few days. right? A 1.5% gap. You'll see that there are quite a few stocks which are coming, about 7 stocks which are coming, right? Now, if you want to see the other factors also, normally it's always good to combine multiple things to get better confidence. One of such thing is TSR strength index. So you add stocks where you want to add all bullish stocks, right? So what we are doing is gap up and the general direction is bullish. So when you see there are 3 stocks which are meeting these 2 criteria. Number 1 is this thing, the gap is there, right? Just looking at the gap will give you some information, but when you are mixing with TSR strength index, then you will see that there's another parameter which is giving you confidence. Now TSR strength index, as you guys know, it's a very powerful tool. It uses multiple different parameters and it has done heavy back testing, which is also called AIML. I don't want to bore you with the jargons. Just see that it uses a lot of interesting parameters to get to a number. You see that momentum is already there, the gap is there, its likelihood is much better of going ahead. Similarly, in this, there's a nice trend and then there's a gap up. Volume is also pretty good. Previous resistance is broken. Good example. Same way. So you can utilize other combinations. So first such combination is TSR strength index. Let's see other combination. We remove TSR strength index. If you are not familiar with it or you would like to take some time to understand it and get confidence in this, what you can do is you can compare with volume. Its volume is greater than previous by at least 50%. So you have a gap up and gap up is with a better volume. So when you click on this thing, you'll see that the stock is not only giving gap up but is with good volume. Another example is gap up with good volume, so better conviction. Gap up with good volume, that's another way of looking at it. Let's remove the volume and see if we can utilize certain other learnings that we have had some time back. Breakout. So what we are looking is gap up and breakout, right? So in this example, Godrej Consumer is coming. So first thing is there's a gap up and it is a breakout, right? So if you have seen the breakout video which we presented last week, then you'll be able to appreciate that how you can utilize 2 powerful strategies together, right? So one we have done is TSR strength index, second is with the breakout. So in this case, there's a clear breakout and the gap up is there. So that should give you better confidence. And along with that, there's a volume also component, which is good. Should the market go in a normal direction without going in the downward direction, this is a stock to watch for, right, in coming days. Okay, like just looking at the parameter, this should be in your watch list at least, right? So these are other combinations. What you can also do is, I'm removing this thing. What you can look for is gap up with at least a long candle, right? So what you can do is latest close is greater than latest open by at least 0.5%, so that the candle size is decent. When you look at this, you'll find the stocks where there's a gap up and the candle size is decent. All the candle sizes are decent, right? At least of some size. Okay, so this is another way of doing it. If you find this to be a little complex of adding such lot of things, what you can do is just go here and type another pre-created screener. So long white candle, right? When you go and select, so along with gap, what you have is long white candle. When you run this, you'll automatically get only those stocks where the white candle, long white candle is there. So in this case is Marico, right? In the previous ones, we have seen certain candles were not of a big length, right? So if you want to get there, you can either, in the previous example, what we have done is we have customized long white candle. Here, there are certain ready-made tools which you can directly use it. If you are a beginner or new to this tool, just start using those readily available stuff. And then at some point of time, you'll find that you'll find limitation of the existing things. Then you go into a clean slate where you can go for your own customization. Okay, gap up with volume we have covered. Gap up near lows, if there's a big gap up near 1 year low, then and with long white candle, obviously you have better chances of a reversal. I don't think there are a lot of stocks today meeting those criterias, but what you can do is you can go to highs and lows and say that I want a stock near historical highs, near, let's say, 5% of 1 year low, or maybe a higher period. Okay, I'm looking for gap which is happening at this level. There's no stock. maybe go to all stocks. Not good quality stocks are there, but again there's no stocks which are coming here. Just reverse of that, what you can do is you can say that it has made a new high and also there's a gap up. So you see Godrej Consumer, it has made a new high, right? New 1 year high. When you look at the stock at 1 year high, you see that the new 1 year high is made and there's a gap up. That should give you a better confidence that is there. It's not only 1 year high, it looks like it's a multi-year high, right? Or rather all-time high. So if you go and look at 10-year high, so it's clearly multi-year high, or maybe 25-year high. If you want to see, go and see, then it is 25-year high stock is there, right? So the idea is to tell you that how can you mix and match parameters. If it is near high and making gap up, it's a great continuation pattern. If it is at a lower level, chances of reversal is very good, right? In that case, you need to monitor it. Don't just jump into it. It can be a false trap, right? Generally, fair value trap or a trap is also there. Observe it for some time, depending on your risk profile or depending on the period you want to hold it for. If you want to hold it for a little longer period, then observe it for a couple of days and then get in there. What else do we have as gap up with new highs, lows? We have seen long white candle. So that's pretty much what we wanted to give you about gap. So certain basic interpretation, common gap, insignificant if it's happening like the example which I've shown for Bank Nifty. Runaway gaps, continuation of trend in the direction. Then breakaway gap, as we have seen one example, Paytm example was one of the example, and there was one more example we had. It start of a new trend. It completely ignores the previous trend. It starts with its own new world. Maybe it's looking for next set of fair value, so that it moves in that direction. Exhaustion, we have seen end of a trend. Gap fill is indecisive. The gap is likely to get filled. So that's pretty much of what I wanted to cover here. Wanted to cover basic strategies, basic concepts, and how to use those concepts in a tool. That's what I wanted to present. Hopefully, I hope that this session was again useful and fruitful to you. If you have any suggestion or anything, you can always reach out to our support level, a support contact number. One of our staff will be more than happy to help. Or you can also look at some numbers out here. There's a contact us form. It is always better to give your query, so that whoever support executive is reaching out to you knows what you are looking for, will be better prepared. If the person knows, well and good. If he doesn't know, he can reach out to some experts or before reaching out to you. So utilize this, contact us, give your time, or what you can do is also there's a form called request for demo. Here we give an option of preferred date and time, so that will be prepared with your query and will try to reach out to you at that particular number, right? Just wanted to take a second here, which is mentioned out here. There could be a possibility that some people will try to reach out to you. They're saying that they are from TSR, Top Stock Research, and they are looking for giving you tips or managing your portfolio. So guys, again, I'm repeating, I've mentioned it several times and mentioned in several places. We do not provide tips. We do not provide any trading services or portfolio service or brokerage service. We are purely a self-driven tool, and this is a self-analytical tool, right? It's a completely self-analytical, self-reliant, self-service tool, which you can use it for your own learning or trading. Okay. So hope that this session was useful to you. If you like it, do share, do subscribe, and so that it reaches out to more people. The more comments that you pass, the more feedback you give it to us, gives us that you are interested in our sessions, you are interested in our product. That will give us a lot more energy, lot more oxygen to produce and do more innovation. As I mentioned in the previous ones also, this is the third in this price action series. We are not only creating the videos, but we are enhancing the product. As you have seen, we are simplifying. One of the feedback which we got is this looks a lot more complex. So what we have tried to do is, instead of two gap up, gap down, we have made it one single one, made it very simple. So those who are familiar with this thing would know that this was a lot more complex. We made it simple. So we do listen to your feedback very, very seriously, and we work on it. In coming days, we are working on a lot more price action strategy. So stay tuned. Do visit this thing, and if you subscribe it, you'll automatically get a notification. Hit the bell icon, you'll get notification that a new video is there, and will present more. of this thing, right? So take signing off at this time. So thank you very much if you have listened to this time. Thank you very much for listening, and we promise you to bring many more interesting things in coming days. See you soon.